Problem 22-39. We're going to be creating an operating budget. First, we need to know what an operating budget is, so I'll show you the diagram of the master budget, which includes the operating budget. So here's a diagram of the master budget components. We've got the operating budget here in green, which includes the sales budget, production budget, direct materials, direct labor, manufacturing overhead, cost of goods sold budget, and the selling and admin budget. Then we have the capital expenditures budget, and then in blue we have what's called the financial budget, the cash budget, budgeted income statement, budgeted balance sheet, and budgeted statement of cash flows. In this problem, we're just going to be doing the operating budget, which is the first part of the master budget. And it's for a manufacturing company. How do we know it's for manufacturer? Because there's a budget for direct materials, direct labor, and manufacturing overhead. For this problem, we will be creating the quarterly operating budget, specifically for the first quarter, which ends in March. So our beginning balances of our accounts come from the balance sheet at the end of the previous quarter, which ended in December. So remember, the balances at the end of one period become the beginning balances for the next period. So we're going to start with a sales budget, which is the first component and is the cornerstone of the master budget. This is because sales drives most of the master budget. So let's read about this company. The Huber Batting Company manufactures wood baseball bats. Their two primary products are a youth bat, designed for children and young teens, and an adult bat, designed for high school and college-age players. Huber sells the bats to sporting goods stores, and all sales are on account. The youth bat sells for $35. The adult bat sells for $65. Huber's high sales volume is in the first 3 months of the year as retailers prepare for the spring baseball season. Huber's balance sheet for December is as follows. So again, we might need to get some of our data from this, and notice it scrolls. And we also have some extra info here. So again, we're just going to be doing the sales budget in this video. So the sales budget, again, is just for the quarter. So the sales budget is just for the first quarter. So we need to know how many youth bats they are projected to sell and how many adult bats. Remember, if it says budgeted, that means forecasted or projected. So budgeted sales are 1,300 youth bats and 3,100 adult bats. 1,300 for youth, tab to the next field, 3,100 for adult bats, and the total looks to be what, $4,400 or 4,400 units. Remember, these are units. Now we get to the sales price per unit. The youth bats sell for $35 and the adult bats for $65. So we can plug in $35 here, $65 here, and then we just have to do the math. So 1,300 times 35 gives us $45,500 of sales revenue, projected sales revenue. Our adult bats, 3,100 bats times 65 each gives us $201,500 of sales revenue for the adult bats. And then we're just going to add those two together, 201,500 plus 45,500 gives us $247,000 of projected sales revenue. In the next video, we will do the production budget.